Good morning, everyone. This is Angelos Zittis from IronFX, bringing you the morning comment for the 23rd of March. US exempts EU from trade tariffs, but hits China. Media suggested that the US will exempt EU from its planned tariffs, while on the other hand will hit China. EU officials welcome the possibility of their exemption, while China plans retaliation acts with imposing tariffs on pork to begin with. The Chinese Retaliation Act is considered as constrained, as the size of the imports affected is considerably lower than the size of the US actions. There seems to be a concern also within the US for the effect of a wider tariff plan against Chinese products, as prices would rise. Should there be a further escalation of the situation, we could see the US dollar weakening in the long run. Cable spiked briefly yesterday on the announcement of Bank of England's interest rate decision, testing the 140-168 resistance line, however continued trading on lower levels later on in a sideways movement. We see the case for the pair to continue to trade in a sideways manner today, however with some bearish tones, as the financial data to be released today could strengthen the US dollar. Please be advised that the pair could prove sensitive to John Bolton's speech, as well as any fundamental news regarding Brexit or the US tariffs issue. Should the pair come under selling interest, we could see it breaking the 140.40 support level and aim for the 1.3915 support area. Should it come under buying interest, we could see it breaking the 140.168 resistance level and aim for the 1.4345 resistance hurdle. Bolton to replace McMaster as National Security Advisor. Trump announced with a tweet yesterday the National Security Advisor of McMaster is to be replaced by John Bolton. John Bolton is a former Fox News analyst, a hawk that supported the use of military means against North Korea and Iran. Overall, after the appointment of Pompeo and now the appointment of Bolton, a hardening of the US positions on foreign affairs could be expected. Especially issues such as the Iran nuclear agreement, US-Russian relationships, and North Korea negotiations could be affected by the aforementioned replacements. As uncertainty increases, the US dollar could weaken in the long run. In today's other economic highlights, in the North American session, we get US durable goods orders for February and the US news home sales figure also for February. From Canada, we get the headline CPI and core CPI rates for February, as well as the retail sales for January. USD CAD traded in a sideways manner yesterday around the 1.2910 support line. We see the case for the pair to trade in a sideways manner in the next couple of days. However, be advised that the Canadian inflation data and retail sales growth could support the Canadian side of the pair, sending the pair in a bearish mood. Should the bulls have the reins, we could see it breaking the 130.80 resistance line. Should the bears take the driver's seat, we could see the pair breaking the 129.10 support line and reaching, maybe even breaking the 128 support barrier. As for speakers, FOMC member Rafael Bostic, Bank of England's Gerdjan Vil, Minneapolis Fed President Neel Kashkari, and Dallas Fed President Robert Kaplan speak. For more information, please read the full comment on IronFX or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Angelos Zittis from IronFX, wishing you solid trading.